Yeah, let's go into our product here and show you a little bit about how we set up the foundation to not only help you with intercompany transactions, but also help you manage multiple businesses or entities. And then we'll kind of get into how we can get you into that forward-looking view into your business for those real-time insights and those real-time actions you can take to make course corrections or adjustments when it's critical. So let's start off with what we were talking about. First of all, intercompany transactions. What we clicked on here was our multi-entity tab. This is a new tab. If you have desktop or if you have QuickBooks Online, you're not going to see this multi-entity tab, but you will in Intuit Enterprise Suite. And what it does is sets up a number of foundations. One for intercompany transactions. We'll show you a few things just really quick. Managing multiple businesses, it's important for each EIN or entity to have its own set of books, for it to be able to interface with its own bank account, etc. And so you'll notice here, this is set up in a parent-child relationship, and each company has its own unique ID. This is what allows us to handle multiple businesses, and in fact, we can handle all the way up to 200. So this will continue to grow and expand as you do. But once we've established our org chart, what about if in some of our different businesses on our chart of accounts, we maybe have a different name? Well, that's where this intercompany account mapping really sets up the foundation for a lot of what we're going to talk about. Intercompany transactions, as well as those combined financials, profit and loss, balance sheets, etc. So here's where you could go in, and if you need to do an intercompany account mapping, again, let's say that your receivables in one account is slightly named different than your receivables in another account. Here's where you can go make those associations. And the reason that you want to do this is because this will help you automate both the debit and the credit on both sides of the intercompany transaction, not just for the one company, but for all companies involved. So let me show you what that looks like real quick. If there's any variances, again, on your chart of accounts, use the intercompany mapping. But for transactions, if we want to split up that intercompany journal entry or expense, we can go to this view and see all of them that we've already done. We're going to add a new one just to show you how easy this is to do. And what you're basically going to see here is the intercompany transaction automatically is toggled on. Here we can go and we can choose which of our 10 companies in this, for instance, do we need to share this expense with. Let's say it's the parent company, and we had a few different purchases that we made, maybe for marketing, advertising, legal work, equipment. Here you can go in and select your parent company, your child companies. You can go into your chart of accounts. Makes it super simple. You can say whether this was a debit or a credit. You can say what amount. And then when you go ahead and click Save down here, what it's going to do is, again, make the debit and credit, in this instance, in all 4 business accounts. The great thing about that is, again, you don't have to forget. You don't have to, worry about making a mistake, making a credit here, but forgetting to make the debit there, or vice versa. This does it all for you. But we even made it better. This was a huge step forward, and we were really excited to have this when we first rolled out Intuit Enterprise Suite. But we've done a few things to make it even better. So one of the things that we've done to really help you out is, again, instead of waiting till the end of the month and having to go in and split up all those transactions or those expenses across businesses, why not do it real time? Like we were talking about earlier, the bank feed. All your transactions can come in on a daily basis. What's nice is you can go in and select any transaction, and you can hit this drop down, and you can click on Split. What this is going to allow you to do is you can actually split this transaction between different companies. So what's nice is, like I said, instead of waiting until the end of the month, if you have a lot of these, you want to do them right as they come in through the bank feed. We actually have the ability to do an intercompany transaction or split up that expense right at both either the expense or the income level inside of Intuit Enterprise Suite. So again, just multiple things that we have, multiple tools to help you manage and run your business a little bit more efficiently. But let's go back to our multi-company, and we want to show you one additional thing. We talked a little bit about journal entries. When you only have half your data or partial amounts of your data, you have a whole team of people trying to work in Excel and other things to combine it. It's easy to over or understate revenue. And it's easy to do that when you're doing intercompany journal entries or sharing income or expenses. Manual eliminations will help you to make sure you don't double count, your income or expenses. But that's important for what we're about to show you next. So if we go back to our multi-entity and our overview, and again, we're running 8, 10, 20, 100 businesses. Now we want to step back and we want to understand not just how is one business doing, not just how is my parent business doing in this case, but how are all my businesses doing? So I can click on a profit and loss, and I can see all my businesses rolled up immediately. But let's say, I have investors or different owners, and let's say, or I'm just curious because some of my businesses are focused on different things. What you can do is you can actually go in here, and what you can do is you can only have a subset of these businesses. So instead of all 10, I just want these 4. So I've selected those 4, stepped off, and here I can see my adjusted profit and loss. If, again, for investors or for other reasons, it'd be nice to have those companies as columns so that you can kind of follow along a little easier on the profit and loss. Again, if you're investing in these 4 businesses, you'll probably want to see the titles at the top and see how the different revenues are doing. Here it's all broken out, and again, those manual eliminations are there for you. But what else can we do to help you? Well, another nice thing that we can do is give you insights, quite a few insights on the reports, as well as, we had talked about just making things more automatic when it comes to your accounts receivable. So let's maybe go there next. One of the things I'm really excited about this software is not having to manually chase your accounts receivable. Why not let the software do it for you? One of the neat things we can do is in our workflow automation, you can set up reminders. You can set up if-then statements. You can use this all sorts of different ways, but we're going to touch on accounts receivable because I do agree with Leah and the research. It's one of the biggest things that ties up cash flow. It's one of the biggest things that ties up staff. Having to go in and remind your customers all the time, hey, please pay me. Why not have the software send out that message? So again, we could go to an invoice. We could go to a reminder, go to next. You'll see the if-then statements pop up. Okay. If we click in this, so if an invoice status is unpaid, what do we want to do? Here we can set some amounts, but also what we can do is we can send a reminder. So, hey, if this invoice is maybe 3 days before it's due, maybe if it's 3 days overdue, maybe the day it's due, you can set up multiple rules and the software can automatically send out reminders and help you get paid faster.